Matic, now Polygon, my god, been calling this project since last August when it was a mere 2 cents. Now, Matic is $1.70. Holy cow, $10 is coming. This is one of the biggest crypto ecosystems. CryptoLark is calling $10. In this bull cycle, I was thinking more like $2 to $5 price point. However, the ecosystem is growing like crazy, so at this point, anything is possible, even $10. So if you've been hitting Matic for the past several months, I've been mentioning it on my Instagram stories, congratulations on your retirement. Between Matic Mania and hitting 200,000 subscribers, I want to thank you guys for all of your support over the years. However, I will be joining my fellow Matic brethren in retirement, so I'm sad to say that this will be my last video. It's been a wild ride, a bit too wild for my taste, so I hope you all live long and prosper, and I hope that you will remember me fondly. Psych, I'm just joking, this is not my last video, and I don't think there's a ride too wild for me out there. I'm as insane a crypto degen as they come. Hello, I'm Crypto Casey, and welcome to another episode of Last Week Crypto. Every Sunday, we review the performance of the largest cryptocurrencies, top gainers, as well as the latest global news stories affecting the crypto markets this past week. This week, we will discuss how the dollar is slowly but surely headed to the grave, more Elon Musk-fueled Dogecoin drama, and the great debate on cryptocurrencies' impact on the environment. To check out the links to all the articles we discuss, go to cryptocasey.com/lastweekcrypto. This week's episode is brought to you by Crypto.com, an exchange with over 100 different cryptocurrencies and over 20 different fiat currencies. On Crypto.com's mobile app, you can buy crypto with bank transfers, credit, debit cards, or crypto at true cost with no markups. They also have a desktop exchange that is solely for crypto to crypto trading. If you use the link below to sign up for Crypto.com, you'll receive $25 worth of cryptocurrency for free when you use the referral code CryptoCasey, all while supporting the channel. Also, every Wednesday, I conduct a weekly AMA or Ask Me Anything at Instagram.com/CryptoCasey. So use the link to my one and only official Instagram account listed in the description area to follow me and ask me anything you want every Wednesday. If you'd like to see me live stream with some other crypto experts in the space, I've started live streaming with Crypto Banter YouTube channel. Most Fridays at 10 a.m. Eastern Standard, I plan on bantering with the crew about crypto and will also co-host some of the weekday shows as well. So make sure to follow me on Instagram to get notified when I'm going live, and you can also subscribe to the Crypto Banter YouTube channel for notifications as well. Awesome, Last Week Crypto, let's go. Looking at the top cryptocurrencies by market cap, Bitcoin diving down 16.3%, ETH hanging in there after some healthy consolidation, up 7.8%, Binance Coin down 8%, and Cardano in the top 4 pumping like mad, up 38.2%. Looking at the top gainers this week, Shiba Inu up an extremely unsustainable 525%. Of course, my main Matic, now Polygon, up 136.7%. Cardano here, of course, and Gate Token up 29.3%. Wow, the market has been quite insane this week. So let's dissect what happened to put our minds at ease, starting with the dying dollar, as world's dollar reserves hit 25-year low. The percentage of global foreign reserves held in US dollars declined to its lowest point in 25 years during the fourth quarter of 2020. Why it matters? The US dollar is still the dominant international reserve currency. But the downward shift likely reflects central banks' use of other currencies for international transactions, implying a declining role for the dollar in the global economy, according to the International Monetary Fund. Like we discussed last week, Russia started dumping dollars for yuan, euro, and gold. Meanwhile, the pesky, politically propped up stock market, sure, it dips once in a while, but against all odds, like the bad jobs report, consumer supply shortages, and inflation, the stock market continues to hang in there and trend upwards. Why? Well, we all know what happens when the economy is doing poorly at this point. And we all know what happens when the money printer makes it rain. It all goes straight to the politicians' corporate cronies, and Wall Street rides the pumps every time. And you don't have to take my word for it. Check out this article. Why soaring stocks could be bad news for the economy. Lurking behind the soaring profits and stock prices of corporate America is a powerful force. Economist Ecout argues that force is one of the biggest reasons why the wages of the typical American worker have inflated. why there's been a significant decline in the percentage of people participating in the workforce, why the share of national income going to workers has been falling, and why startup growth has slowed in recent decades. That force, he says, is the startling growth of market power since 1980. Market power, aka monopoly power, is the ability of companies to make hefty profits by pricing their products and services higher than it costs to make and provide them. It costs Apple less than $500 to make a high-end iPhone, but it charges more than double that amount to consumers. The ability of Apple to do this is a sign the company has a lot of market power. In his own study published in a top peer-reviewed journal, Eekhout and his colleagues found that the markups of companies publicly traded in the United States have tripled since 1980, and that dominant companies are much more profitable than they used to be. In 1980, the average profit rate of a publicly traded company was 1% to 2% of sales. Now, they have profit rates between 7% and 8% of sales. It's a mind-boggling increase. Market power now is so widespread from tech to textiles that it lowers production and the demand for labor, he writes. Instead of creating jobs, profitability due to market power lowers wages and destroys work. That is the profit paradox. Why has there been growth in market power? Eekhout blames two big factors for the rise of market power. The first is lack of enforcement of competition by the government. This includes allowing companies to merge with and gobble up their competitors, as well as an overly generous patent system that hands lengthy monopoly rights to sell all sorts of gadgets and pills. Most of the corporate lobbying done in Washington is all about protecting and expanding market power. So the Fed's money printing benefits big corporations, which then pay off the politicians. Nice, very nice. What else is it doing? Well, Stanley Druckenmiller says the Fed is endangering the dollar's global reserve status. I can't find any period in history where monetary and fiscal policy were this out of step with the economic circumstances. Not one, the chair and CEO of Dogecoin Family Office said. Though he agreed with the early steps the Fed took during the pandemic, he said that policies have continued for far too long. Yes, and you know what else has continued for far too long? Episodes of Last Week Crypto without featuring a tweet from the savage Sven Henrik. You know where I stand on the Fed and Powell and their denials on exacerbating wealth inequality and the danger of the insane asset bubble they have created. Well, here's Druckenmiller dropping truth bombs on Powell and the Fed on the very same subjects.
But let's start with the Fed and inequality. I don't think there has been any greater engine of inequality than the Federal Reserve Bank of the United States the last 11 years. So hearing the chairman talk about visiting homeless shelters is very, very rich indeed. I just had the best year I've had in 15 years last year. Everyone wealthy I know is making a fortune. And why are we making it? Because this guy is printing money like there's no tomorrow. And the kids in Harlem, in my opinion, are not benefiting from money printing, but Stan Druckenmiller and other wealthy people are. So for the life of me, I can't figure out why the left is so excited about money printing when all the data says the people that benefit from money printing are rich people that know how to navigate the markets. The odds-on bet is we're going to have inflation. And inflation is going to hurt poor people, again, a lot more than rich people. How does this thing end? To me, the asset bubble, which he's blowing up into unbelievable proportions, busts before the inflation ever really manifests itself. That's what happened with the housing thing in 08, 09. We never really got to the inflation because the asset bubble burst. Not dissimilar to what happened in 29. That's not my central case, but let me just say we've never had a deflationary bust because inflation was too close to zero or 1.5 instead of 2. We've had them because we've had these tremendous asset bubbles. It happened here in 29, it happened to Japan in 90, and obviously it happened in the great financial crisis. And there is no one, no group that will get hurt more by a bust than the poor. They will be first in line to get screwed, trust me.
Wall Street and rich people getting more rich from legalized counterfeiting and market manipulation? John, old news. Here's some more old news, market manipulation, from one of our favorite cronies. Ether should be as much as 75% lower at around $1,000 based on network activity, JP Morgan says. Big yawn, guys, big yawn. JP Morgan is notorious for propagating propaganda to manipulate both the traditional markets as well as the crypto markets to buy things low from paper-handed retail investors to sell high for a profit back to those same paper-handed retail investors. In fact, it looks something like this. Whenever you panic sell, you sell right into the whale's bag and you're getting eaten up. But maybe JP Morgan's publication was a little different this time around. Maybe they released it because they were feeling a little threatened, as Ether's price pushes past 4K for the first time. It approaches JP Morgan's market value. Epic. At the end of the day, elites built their power by controlling information and controlling the money. Now, they have lost control of both. Yes, they should be scared, as a Doge statue stares down Wall Street's charging bull. The Shiba Inu statue represents cryptocurrency's challenge to traditional finance. And Doge, in some cases, is eating Wall Street's workforce alive. Goldman Sachs London managing director said to quit after making a fortune on Dogecoin. A managing director is said to have quit Goldman Sachs in London after making millions at Dogecoin. Sources say that Aziz McMahon, a managing director and head of emerging market sales at Goldman Sachs in London, has resigned allegedly after making money on Dogecoin, the cryptocurrency championed by Elon Musk, whose value rose 72 times between the start of January and late last week. Wow, amazing. So as the value of crypto increases and we all inch ever more closely to retiring off of our crypto gains, make sure you are transferring your crypto off of exchanges to hold safely in a cold storage hardware wallet. You can scroll down to the description area below to access the correct and official sites of my recommended hardware wallets. BC Vault is my personal favorite. Another option is the Ledger Nano Backup Pack, so scroll down to check them out. Or if you would rather make income from your idle digital assets you're planning to hold for the long term, you can safely earn interest with services provided by BlockFi. With a BlockFi interest account, your cryptocurrency can earn up to 8.6% APY. Interest accrues daily and is paid monthly. There are no hidden fees and no minimum balances. So if you're interested in learning more about BlockFi, you can get up to a $250 Bitcoin bonus when you use the link in the description area to sign up, all while supporting the channel. Protecting your ability to generate income so you can buy more crypto is another important thing to consider. So if you'd like to learn more about the advanced technical concepts of blockchain and become a developer in the space, check out Ivan on Tech's Academy. If you use the link below, you can access the Academy at a discounted price, so scroll down to check it out. Nice. As the week presses on, Elon continues to champion his precious meme coin, and yet another tweet this week asking the world, do you want Tesla to accept Doge? To which I and 3 million people responded, yes, correct. Sweet. And that was just one of the few Elon tweets that rocked the crypto markets this week. Tesla, after announcing it would accept Bitcoin for payment, retracts its move in this company statement Elon shared in a tweet. Tesla has suspended vehicle purchase using Bitcoin. We are concerned about rapidly increasing use of fossil fuels for Bitcoin mining and transactions, especially coal, which has the worst emissions of any fuel. Cryptocurrency is a good idea on many levels, and we believe it has a promising future, but this cannot come at a great cost to the environment. Tesla will not be selling any Bitcoin, and we intend to use it for transactions as soon as mining transitions to more sustainable energy. We are also looking at cryptocurrencies that use less than 1% of Bitcoin's energy per transaction. Big yikes, the aftermath? Elon Musk's tweet wiped out $360 billion worth of Bitcoin. It may have been marketing for Tesla. I agree with the narrative that Tesla's announcement was a marketing ploy, because the world's richest man in the world, who is building rockets to go to Mars, is probably well aware of how Bitcoin mining works, and with his penchant for green energy is also probably well aware of the contents of this article. What's the carbon footprint of fiat money? Bigger than Bitcoin, that's for sure. Critics of Bitcoin like to compare its carbon footprint to a transaction on your Visa card, ignoring the environmental impact of the infrastructure that sustains fiat money and the enormous collateral damage that fiat brings. These secondary effects make fiat money orders of magnitude more energy destructive than Bitcoin. You can appreciate fiat's secondary footprint from any street corner on Earth. 80,000 bank branches and 470,000 ATMs in the US alone, along with forests of skyscrapers that dominate every city on the planet. Then the part we don't see, Finance and insurance are 8.4% of the gross domestic product in the US, only slightly behind manufacturing. That means millions taking the subway or driving to the office, or the pandemic equivalent firing up an army of laptops and call centers to sling paper money under Fiat's harsh fluorescent glow. Visa transactions don't even come close. There's no doubt in my mind Tesla is well aware of these facts. So the announcement that they won't be accepting Bitcoin until it's more environmentally friendly was totally a marketing scheme, in my opinion. Check out this tweet by Tim Draper. Has anyone calculated the energy and the CO2 the existing banking system uses? The buildings, the paper, the bankers themselves? Maybe Elon should not accept fiat for cars. Hashtag Bitcoin. Right? Wouldn't that be something? Tesla not accepting fiat for their products and services? That would cause quite a scene, which Elon loves doing. And yes, Draper, someone has in fact made these calculations. Take a look at this chart depicting energy expenditure across monetary and banking systems. All in all, Bitcoin uses a mere 7.8% of the entire banking system's energy. So will Tesla stop accepting fiat? For the foreseeable future, I doubt it. But will Tesla start accepting Dogecoin? I think there's a strong possibility. Yet another market-rocking tweet from Elon this week. He says, working with Doge devs to improve system transaction efficiency. Potentially promising. Another troll comment? Or is there any truth to it? Well, Dogecoin developers say they've been working with Elon Musk since 2019. They are working with him to make the cryptocurrency a cheaper, greener alternative to Bitcoin. Okay, so following this whole Elon is working with Dogecoin debacle was an onslaught of commentary that Musk is losing his credibility, he's insane, or if he were actually serious, he'd be looking at blockchain projects like Cardano, Bitcoin Cash, or similar. But what's interesting is he may actually be onto something. Check out this chart comparing some cryptocurrencies by the amount of kilowatt hours consumed per transaction. Ripple Labs XRP coin uses the least amount of energy, which is great except for the fact that the network is centralized, was created by the big bankers that tanked our economy in the first place, they are dealing with SEC issues at the time of this video, etc., among other things. But check out the next crypto in line with the least amount of energy consumption. That's right, Dogecoin. Followed by Cardano, Litecoin, Bitcoin Cash, Ethereum, and Bitcoin. Interesting things to think about. We shall see how the Elon and Dogecoin saga continues to rage on through this bull market and beyond. Awesome. Well, that was Last Week Crypto with me, Crypto Casey. If you enjoyed the episode, please make sure to like this video and subscribe to my channel for more crypto content. To check out the links to all of the articles we discuss, go to cryptocasey.com/lastweekcrypto. So what do you think about Elon working with the Doge developers? Will Tesla start accepting Doge for their products and services? What would happen if they stopped accepting fiat? Let me know in the comments below. Be safe out there.